Aw, Spin, you definitely cheated. Gotta keep those intro songs fresh, you know? Morning, morning, Oswald. All right. Good morning, good morning. Good morning, good afternoon, good evening, wherever you are in the world, ladies and gentlemen. Let's get into today's stream. And before I get started, as always, I am not a financial advisor. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please feel free to go through this, pause the stream, read, go into my description of my video where you're going to find lots of different things, but also these disclaimers as well, letting you know that this is all for educational purposes only. Great, we've got that out of the way. Well, good morning to you all. Got some news coming up at 10, so I wanted to start this stream a little bit late because I'm not going to sit here and have you all just sitting with my blank expression staring off into the screen for, 2 or 3 hours. We had news at 8:30 this morning and also coming into 10 o'clock, so there's not going to be any trades for me until after 10 o'clock. We've got a lot of time until then, so I've got lots of time to go through, and I'm going to do a full analysis this morning because I've got about an hour to, wait. But let's get into the Nasdaq first, as always. And can you all hear me okay? Is the mic good? Nothing crackling? You can see my beautiful, not smiling mustache face. Loud and clear. All right, good stuff. All right, so taking a look at the Nasdaq, I'm going to do all these analysis on the hourly chart. It really doesn't matter which time frame I do this on. I can do on a 15, a 5. It doesn't matter. But the 1 hour just allows. No, I've deleted the wrong thing. Help. The 1 hour just allows me to see kind of the broad view, bigger picture, so I can do this. I'm not going to go quickly, but it just makes it a lot easier to get through the analysis. So looking at the Nasdaq, 2 weeks down. Week 1, week 2. 2 weeks of breakouts down. So I like to highlight this and just let me know that, hey, this market has been going down now for 2 weeks. And this week has triggered the previous week's low. So this would have been the third week now. All right, so we got 2 weeks of breakouts down. And that's kind of the big picture details. We got the peak formation down here. And on Discord, I actually kind of goofed. I put initial balance. I meant to say opening range low. What I was trying to do is highlight the opening range low here and that fact that we've got this peak formation. So if you look at the opening range for this week and thinking about the larger template that could be at play, opening range, initial balance, the initial balance extended the low to the downside, putting in that peak formation at the low of the current week. And then now we have the breakout back up to the upside. So we're back at the high of the week. We traded down into the low or made a lower low, put in that peak formation low, which something kind of interesting to look at. And I always think that observing price is very interesting. If you look over here, these big down close candles, this 1, 2, 3. If you extend this across and just starting to notice like little things like this, I think is really interesting and part of the reason I find psychology so interesting in general. And when you start seeing where these traps are really being put in place and things like that, a lot of times you'll see them in hindsight. But if you can kind of start to see them before things happen, or even now looking at it after things have happened, it still can give you a lot of cool information. So this 1, 2, 3 down, 1, 2, 3 down, and then over here, notice the big 1, 2, 3 to the downside with traps below push 2. So it started over here. This is where the trap began, and then this big 1, 2, 3 back down. People are trading the breakout of these candles So we've got traps down low. We got traps down low. You know, we've got volume caught down low. Anyways, just something interesting that I saw that I wanted to point out to you all about 3 push patterns. Anyways, looking at this, breakout day 1. This is an important detail. So the 2 weeks of breakouts down. Now we have breakout day 1 back up to the upside. So with breakout day 1, in an uptrending market, normally I'd be looking for a 3 levels of drop into the low of the day to look for a continuation pattern. We're at the high of the week. They trade back down and 3 levels of drop. Now this is Thursday, so we might have a Wednesday, Thursday, Friday template. Wednesday breakout, maybe Thursday pullback, and then maybe Friday continuation. I really don't know until it actually happens, until today's traded. But with breakouts day 1 and being up high, pretty far away from that breakout level, I wouldn't be surprised if there's a pullback. But if I do get the trend trade, it's going to come from the low of the day. It could come from closing price. Or it could just be a pullback day where they continue to make lower lows and lower highs throughout the session. So I need to be aware of both of those things. They put in a peak formation at the high of the day, which is also the high of the week, and are now in consolidation between the high and the low. All right, so breakout day 1, what would I normally be looking for? 3 levels of drop for the trend trade. Again, we're 2 weeks of breakouts down, and we're back at that breakout level. We've stopped out those breakout traders, and we're up high, so I need to be aware of all of those things. But the actual trade setup that I would be looking for on the day, breakout day 1, looking for the trend trade, okay? All right. Let's go to US 30. Okay, I'm going to zoom out a little bit. Still on the 1-hour chart. Good stuff. Also a new month. And that's definitely an important detail that I need to tell you all, is that we're in a new month, which means that the high and the low of the month is going to be established. And we have non-farm payrolls tomorrow. So again, when I'm thinking about, you know, should I be taking trades today and things like that, or is it better just to wait for the Wednesday, Thursday, Friday template to present? If there's a really great trade setup today, then I'd be more than happy to take it. But I'm going to keep in mind that tomorrow is non-farm payrolls, and to remain patient. You know, save those good trades for when they count. All right, US 30. I'm going to take the large picture. Let me zoom all the way out. Let's see. So we got multiple weeks of breakouts. This is 1, 2, 3, and it kind of pulled back. Did a little failed break down at the low. Okay, so I don't really have weeks of breakouts necessarily. Peak formation high, peak formation low. This is going to put us in a range, kind of from up in this area. And the failed break down here. So this is our larger box that we can look at. And with that in mind, so I don't really have a really good indication with the weeks of breakouts and things like that to look at. So I'm just going to look at the current 3-day template within the week and see if there's anything decent. Monday, Tuesday built the box. Wednesdays broke out, and it looks like it didn't quite make it closing outside the range. So I think this is going to be a no trade pair for me. I don't have a signal day of any kind. No 3 days of breakouts, no inside day, no first red, first green. Yep, that's what I'm going to go with. Take a look at platinum. I'm going to zoom out. All right. Inside week. What is that? 3 weeks ago. Breakout week 1, breakout week 2. So at the close of this week here, we had the second week of breakouts. Oh, no. Second week of breakouts down. Okay, and then coming into this current week, breakouts day 1, breakouts day 2, breakouts day 3, up here at the high of the week, and then now today we're inside. So this is 3 days of breakouts up in a down moving market, and we've triggered the previous week's high. Let's go down to a lower time frame. I wouldn't mind looking at the actual day itself. All right, so we've made a lower low. I don't really care for how the actual day itself is presenting. Take a look here. So we made this lower low. We pumped it back up. We're in this wicking sideways sort of consolidation. Peak formation at the low. And this little 1, 2, 3 up. Maybe traps above push 2. I think I'm going to avoid this pair for today. The 3 days of breakouts. With 3 days of breakouts, I would have really liked to have seen, some kind of follow through, some higher high and then a lower low, and then we come into the session still up high. Where this is just pulled back to the breakout level and stop these people out. Feels 50-50. I'm going to keep going. Okay, oil. Go back out to the 1 hour. So with oil, we've had 3 weeks of lower close. This was not a breakout week, but this was the first week of lower close. So this is a down close week. And then week outs are week outs. Breakout week 1, breakout week 2. And this is going to bring us into the third week. And we've triggered the previous week's low, and that kind of has failed as of right now. Okay, week 2 breakouts down. So this failed breakout at the low of the week, day 1, 3-day cycle, day 2, 3-day cycle, and also, oh no. My computer's doing that lagging thing again. It's really frustrating. Anyways, this is day 1 of breakouts. Back up to the upside. Now, this day 1 of breakouts is closed extremely far outside of the breakout, and that's fine. What I am going to do is throw up the opening range high. Okay, opening range high. So that puts us back at the high of the week, and you can see this nice little three push pattern down into the low, trap volume down low. Opening range low was down here, and that's where that failed breakout occurred. So today is day 3 of the 3-day cycle, and we're at the high of the week. In breakout mode currently to the upside. So I'm going to be watching this pair at the low of the day. Breakouts day 1, watching for maybe that trend trade. If it starts to roll over, whatever. But this nice formed rectangle, we've already triggered the previous day's high, which means that I know it's not going to be an inside day. This is definitely a pair that I should be watching. All right. Let's see. Yep, that's it. Breakouts day 1, watching the low of the day. Coming into the New York Open. And also the after the news, 10 o'clock on this pair. Take a look at natural gas. Okay, this is a peak formation low, peak formation high. Let me zoom out. This is one that has had 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. And on the 6th week, it looks like we have stopped currently from continuing to go lower. All right, so 6 weeks down. Let's throw up the opening range high up here. There's the opening range high and low. So the initial balance spiked both sides, so they extended it down. They've also extended it up high. Putting that peak formation at the low of the current week, peak formation high at the high of the week. And now we're back down on the inside of that range. So let's look for a signal day of any kind. We got a first green day followed by a first red day, but I'm going to ignore that fact just because of the pattern that's built. Peak formation low, peak formation high. Whenever this happens, watching closing price and the low of the day, high of the day for those trades. Now it looks like this has already, this was a first bar entry. 8 o'clock, we got the pin hammer at the low of the day and the engulfment. Oh, that is a beautiful chart. Look at that higher high. Trades back down into closing price. Really clean 3 push pattern down into the low, building that W. See, now this is a extremely clean chart. There's the engulfment, consolidation. Engulfment was down here, but leg 1, and then the second leg, engulfment, pin hammer, and now the continuation. That makes me kind of feel like the trade that I would have wanted to see or already kind of look for has already started moving. And ultimately, also down here, looking at the end of day consolidation, which would be like this. The end of day consolidation itself was peak formation high, peak formation low, consolidation in the middle, making higher highs, trading back down into the low, kind of building that box. Now we're back at the top of the box. Really clean chart, really clean pattern, but I don't think that I'm going to get anything from this, considering it has already, I'm not going to say made its move. It could go make another move somewhere else, but I'm going to look for something that I think might be set up well and doesn't look like it already has done its thing. All right, take a look at the CAD. CAD finally escaped that boundary, and we've been climbing. Do something like that. Right. Take a look at the current week. We had our first red day on Tuesday. A pretty good first red day trade. I hadn't been watching this pair. First red day trade on Wednesday. Breakout day one to the downside. Okay, we got a fairly kind of a weak close. So breakout day one to the downside, looking for 3 levels of rise coming back up off the low before looking for continuation. We could use previous day's low. Puts us at 50 pips back up, so not quite the 3 levels that we wanted to see. Do we have a nice kind of stair-step pattern back up there? Not really, but this nice little ramp kind of indicating that there's a potential fast move that can come back down. Is this helping me with today's trade? Absolutely not. So I think this is not going to be the pair for me. Let's go on to the pound. Okay, we had a failed breakout 2 weeks ago. That was week 1 of the cycle. Week 2 of the cycle was a breakout week. Week 1 breakouts down. Now we're into the current week, which is now week 3. Which means that I would be normally looking for a sell high opportunity if it presented. So high of week, high of day, some kind of first red day template. Let's see here. This was the week's open. And I think this is another one where I'm not going to have anything. We had a first green day that absolutely capitulated down in London. All right, we're going to go to Euro. The Euro is a 3-day rectangle. So this 3-day rectangle was a peak formation low, peak formation high. And when I did my analysis last night, I had said no directional bias, just focus on peak formation low, peak formation high, and this being a pair that tends to trade in the London session. It looks like the engulfment came. It was a first bar, first hour entry. So let's take a look. Coming off the high of the day. Traded back up. There's the engulfment. Yeah, this was a first bar, first hour, lower low, lower high. I think this was a low-hanging fruit continuation back into the third or the second hour. Breaking down, breakout pullback. And then the space, the continuation back down through the low. Does that help me coming into the rest of the day, the rest of the session? Probably not. So again, I think I'm going to move on. All right, we'll take a look at gold. All right, we had a failed breakout week, it looks like 2 weeks ago. So that was week 1 of the cycle. Now we got week 2 of the cycle. Trending away from week 1 highs and now coming into week 3. Let's take a look at the current week's, which was actually, this was week 1 breakouts down. But of course, not all breakouts will succeed. So if this is week 3 of the cycle and this week were to close back up here, this is going to turn this into week 1, week 2, and then next week would also be week 3. And if we have a breakout week to the upside, it could become interesting. All right, so Monday, Tuesday, Wednesday. Monday's opening range. Tuesday was breakouts day 1, breakouts day 2. And then now we're into breakouts day 3 to the upside. Okay, so breakout day 1, breakout day 2, breakout day 3. Let's take a look at today itself. Okay, higher highs and higher lows. And then they started making lower lows and lower highs. Pretty clean chart. Monday, day 1. Yeah, the breakout failed. This was day 1 of the cycle. Day 2 of the cycle, day 3 of the cycle, but this was breakouts day 1 to the upside that succeeded day 2 and day 3. I think that gold would be a chart worth watching for this 3-day of breakouts. Especially after the news. Kind of seeing this as Asia, peak formation high, London, peak formation low. And then now we're back up in the middle. It's like a 3-session setup. Yep, I'm going to watch this. This looks good. Gold futures looks different. How different? It looks pretty the same to me, John. Or is it the overall? Oh, it's because of the contract shift. Yeah, and this is exactly why I do my my analysis on the Forex pairs, because it just looks... the levels and things like that seems to work a bit better for me. Yep, we're back up above previous day's high. Good stuff. All right, going to the Russell. Zoom out a little bit. Okay, so Monday's opening range. Same thing, we got a peak formation low now and a peak formation high. We're back in the middle. Zoom out. Kind of looking horizontally here. Breakout level of a previous week's high has built this big rectangle. All right, and for the current week itself, day 1 of the cycle, peak formation high, peak formation low. Day 1 of the cycle, day 2, but it was also kind of a fail. So we're going to do one of these and one of these. And now that's just going to put us right back in the middle. All right, I'm going to go back through. I'm not seeing anything that's overwhelmingly glaring for me today. And actually, when I was looking at the chart last night, I kind of had the feeling of maybe today is a better to just wait kind of day. Which is another reason why I started the stream a bit late. But I'm, of course, going to watch and see how things start to present around 10 o'clock, 10:30. I think the Nasdaq needs to be on my list. This breakout's day 1 and a pretty clean chart. Pretty good 3 push pattern into the high as well on a peak formation high. I'd be fine with trading this either direction. Either the short trade for that scenario would be, the reasoning behind it would be we're going to go back and stop out these breakout traders before the market actually continues in its intended direction. Reason for long and where I would be taking the long, low of day, 3 pushes back down into the low. Breakouts day 1, looking for 3 levels of drop. 220 pips. Let's see, 150 would put us about right there. So either one of those is going to be fine for me as long as it presents nicely and cleanly, and at a certain time, I would be good with either one of those. US 30, not so much. Platinum, no thanks. Oil, definitely need to be watching. Definitely need to be watching oil. Let's see. Can you check UJ? Let's take a look at UJ. Okay, breakout week 1, 2. That 2's questionable, but it's fine. At least 2, 3, 4. So we're into the 4th week down. Opening range breakout to the downside. Day 1 breakouts down. It's first red day on Tuesday. And actually, this first red day was also day 1 breakouts down, which presented this really good pumping pattern. After day 1 breakouts down, they pumped it up. It's a pretty good amount. It was 150. So 3 levels. What time is this? That was midnight. So for the, looks like for the London first bar entry, probably nothing else for me today on this one, though. All right, yeah, I need to get my stuff set up. We got the market open in 3 minutes, so let's go and do that now. So I said I needed to watch the Nasdaq. I needed to watch gold, which is fine. Oil down here, good. I'm not completely turned off or disgusted by the Russell. I'll just leave that one up there. Oh, you're right. I didn't check silver. Oh, I got silver down here. That's pretty much the exact same pattern as gold. The way that it's pulled back and everything looks pretty much exactly the same. And this is also... So this one was week 2 down compared to gold being week 1. I think either one would be fine. I'm going to go with... I'm just going to hold on to gold. Okay, 2 minutes to New York Open. And I'm going to go to here. Get rid of my face so you don't have to see my mustache for the next 2 hours. There we go. Trying to get logged in, but my computer's going so slow. I'm going to skip these ads for you all. That way you don't got to watch Windex commercials or whatever. I need to come up with new jokes. The ones I've got are... I don't know. My dad jokes need improvement. Continue the series. I watched it. Yep. Hey, so the next... I've been working on the slideshow, a few slides at a time throughout the week. Which I found is kind of the best way to do it, because if I try to do it all in one day, I'm going to lose my mind. The next video is coming out Saturday. Either Saturday or Sunday. Someday this weekend, it'll be out. That beginner to advanced series, we're starting to get into some more advanced topics, but not so advanced that it's considered advanced. It's just, this is the first video now where, if you didn't watch the first 2 videos, and I think that a lot of people don't want to see the beginner stuff, but, You know, this first couple of videos are the ones that is the reasoning. It's the why behind why the strategy, why the system works. It builds your mind into an understanding of how the market moves and why I'm looking for the certain things that I'm looking for. And if you don't have that, then you don't have, when you actually get to the setups, which is what everyone I think wants to see, is entries. It's like, if you just go watch the entry videos, it's like, okay, this is just made up nonsense that, you know, he's just taking random entries or whatever, you know, whatever feelings you might get from that confusion because you didn't watch the first 2 videos or 3. It's like, you got to understand the basics first to kind of get the rest of it. But anyways, all right, so I've got my 4 charts up here. Let's get down to a 5-minute. And I've got my levels up there as always, the purple line being previous day's close. Little black solid lines are the previous day's high and low. And we got that news in 30 minutes. Okay, Nasdaq coming off the open with a big push to the upside. And gold making a run for the high of the day. Okay, so let's get that up there so I can keep track of what my line means because I don't want to just have some random line up here on the screen. Where's the Russell's high of day? Up here? Pretty much equal with the other. Okay, we'll put that up there as well. Okay, oil. Peak formation low at the low of the day. Kind of this. They are very coiled on oil. Yeah, who knows? Who knows what it's waiting for? It's waiting for a 3-day setup. Maybe something over the weekend is going to happen, and then oil will do oil things. And it's been a while since I've came back and seen oil gapped 500 pips. Maybe that's, you never know. Praying for peace, yeah. I'm right there with you. Right there with you. We don't need any of that stuff out there. That one song comes to mind. What is it? Why Can't We Be Friends? You know, we could all just get along. That'd be great. All right. Nasdaq had that big push up. Kind of looks like a just kidding moment. I didn't trade yesterday. I didn't even at all. Like I didn't look at anything. FOMC days is a Cam, stop being weird, don't look at the chart kind of day. Especially in the morning session. And I did peek at it in the afternoon, not to actually take trades, but just to see what the reaction was going to be to the FOMC news event. To see if it was going to build a bigger template or not. And there really wasn't that big of a reaction, compared to some FOMC events. So. Now 7 minutes off the open, or away from the open. Russell making a run for the high of the day. Gold consolidating just under. No, I just really want to see this 10 o'clock news event come out first. And then, depending on whatever setup has presented prior to the news, I can use that information and go forward accordingly. Which means that we've got, was that 22 minutes? It's quite a few 5 minute bars before the next opportunity might present. Not only are they working it, but they came down and it's like to the tick equal with the previous low, which seems interesting. Make sure I didn't miss any closing price things here. So this projected across horizontally would have put us pretty well with that level there. And then we got this here. So we kind of got this rectangular box at this point from here down to here. Keeping track of little details as they present. This little ramp here, if it blows off through the high of the day, I'm going to start projecting a lot more focus onto this pair and see how it reacts when we get there. I feel very drawn to oil and the pattern it's presenting. This is a, if you look at it kind of different light. One of these symmetrical ordeals. Call it the Dorito pattern. Looks like a Dorito chip. Some kind of tortilla chip. Symmetrical triangle. Basically what those patterns mean to me is that they're in consolidation, but also that it's hooking and jabbing, trapping people on both sides of a range. So we got longs hooked in up here and shorts down here, and as they constrict, we've got long-bodied candles forcing people to buy and then immediately taking it away. And they're ascending the close of both. They're ascending the close of the down-close candles, and they're descending the close of the up-close candles, which obviously builds the tortilla chip sort of pattern, the little symmetrical triangle. Okay, Nasdaq pushing back up through closing price. Yeah, that's a joke, by the way, the tortilla chip thing. It's just a symmetrical triangle, but kind of like I associated the heartbeat pattern with like a heartbeat monitor or whatever. It's just a fun analogy, I guess. Thought that was an indicator. What do you mean, Paulie? For the tortilla chip? Oh gosh. Hey, so with larger channels going down, I don't pay attention to them. Whenever you have big wide swings like this, I'll ignore the channel. That's just a personal preference compared to something like this. See how price is tightly wound as it's moving and coiled? I prefer to look for channels like this that are coiled and tightly wound like this because I can gauge the behavior within the channel a lot better. For example, this pullback here is obviously that's the trap, right? So we got traps below push 2. The next one that comes down doesn't let those people out. The next one that comes down doesn't let people out. The next one that comes down doesn't let people out. So like tightly wound coiled channels like that, I usually pay a lot more attention to compared to a wide swinging whipsaw channel back and forth. Again, that's just personal preference. And I found that these, I can actually get really good trades off of compared to something like this. I tend to get whipsawed back and forth in these, and they're just not as clean, in my opinion. Engulfment pin hammer on Nasdaq, but again, making the choice to wait for the news first. Engulfment pin hammer. I think that's, Kyman, if you are not comfortable with the 1 minute chart because you think it's too fast, or I don't even think that it's the 1 minute is too fast. I think that people don't truly understand the time rotations, and because the clock is what is going to matter the most when you're using the 1 minute chart. If you get a 1 minute or a 5 minute engulfment, for example, and then you go down to the 1 minute chart and wait for the pullback. So like, for example, one of the things that I like to do is I don't just buy the close of 5 minute bars because things like this happen. But what I will do is see this engulfment and go down to a 1 minute chart, having seen the engulfment on the 5, and wait for maybe like a 3 push pullback of some kind, and then an engulfment on the 1 minute chart. If it presents nice and clean and things like that, then that's good. And also understanding the time rotations. So this is the open of a new 5 minute bar, 2 minutes in, 3 minutes in, inside bar, and then this is the engulfing bar back up. And that could start or begin the expansion of an inside bar. And if it continues to go higher, this turned into a W. The midpoint of a 5 minute bar is usually where the real move is going to occur. The beginning of a 5 minute bar, think of it like opening range, initial balance, and then this is going to be wildly confusing. But when you time a 15-minute bar or a 5 minute bar, for example, in a 15-minute bar, the first 5 minutes would be like the opening range of that bar. The second 5 minutes is usually going to expand either side, but maybe it won't be the real move of the bar. And in the last 5 minutes of that bar, it will complete the pattern of whatever it was really going to do. Because how many times have you entered in on a 5 minute bar or a 15-minute bar too early before the bar closed or whatever, and then next thing you know, it's a huge pin. And you're like, oh my gosh, what happened? Yeah. Same thing with a 5 minute bar. 2 minutes and 30 seconds into a 5 minute bar midpoint, watching and seeing, around that point within that 5 minute bar, what kind of pattern is presenting down on the 1 minute chart. Really good ways of timing your entries so that you're not getting in too high within the bar's range, or you're not getting in inappropriately within the bar's range to reduce your risk, at least to the best of your ability. And the same thing goes with like your add-ins as well, or with my add-ins. Whenever I'm looking to add in, sometimes I add in too aggressively, not thinking about the time that I'm executing. The 1 minute chart is looking really good and it's falling aggressively, but then the next 5 minute bar opens and I've added in too aggressively into that previous 5 minute bar candle. The next 5 minute bar opens, or the next 15-minute bar opens, and it pins up, which could put you in a lot of drawdown if you're fully sized in. So it's a lot of times, as the longer I do this, it's like, okay, I'm going to add in to this 5 minute bar, but I'm going to wait until the next, or maybe 2 5 minute bars later. And when they pin up, I can maybe sell up close bars on a 1 minute chart to get a better fill on the entry or the add-ins. So like if it is dumping, or in this example, we're pumping, but we got the engulfment. Let's say I've added into this bar here, and then it starts to follow through, and I want to hold this trade longer. Maybe just waiting for some kind of 1 minute pullback and then an engulfment back up to the upside to let me know, hey, we're ready to start going higher. And then on the next 1 minute bar, when it pins down, adding into that position on a down close bar in an up move, which is something that Al Brooks and a lot of other people, talk about with price action, is you're going to find your best entries in an up move on a down close candle, and you're going to find your best entries in a down move on up close candles, because that means that you're entering at the high of a pullback. And I just use price action to confirm and things like that. But anyways. Yeah, but if you only look at the 1 minute chart and that's how you're gauging the market and taking entries, yeah, you're going to get definitely whipsawed. Not saying that you are. I'm just in general, if that's what people are doing. And when I first started watching Stacey Burke's videos, like all of his videos were like he was just on the 1 minute chart. So I thought that, honestly, that's what I thought he was doing. So what I was doing, and I was watching the high and the low of the day on the 1 minute chart and waiting for the engulfment and the pin hammers and these little M's and W's, not understanding the breakouts and the big picture and the 3-day cycle and the 3-day templates and things like that. And I was very confused because I was getting such mixed results. I started to see results because, 50% of the time when you're at the high of the day, it's going to work out. When you're at the low of the day, it's going to work out. But without the big picture understanding, the results were still very skewed. And because I was just staring at a 1 minute chart, which is just ridiculous. Hamdi, holy cow, I haven't heard from you in ages. I hope you're doing well, man. The last couple of videos have been, I'm going through like a beginner all the way through advanced sort of series. Kind of going back to the basics and then moving all the way through. Good stuff, Hamdi. That's good to hear from you. I was wondering where you went. I'd say that's probably one of the, in this, the whole reason for doing YouTube and things is it's really nice to be able to interact with people because trading's such a, I've talked about this quite a bit. Such a lonely business, really. And when you try to talk about it with people, they don't understand. And I despise when people ask me what I do for a living and I have to tell them because their first question is always like, or the next thing that they're saying is like, oh yeah, so what stocks are you investing in? I'm just like, oh gosh. So it's like people really don't understand and it feels like you don't have anybody to talk to about things. So one thing with YouTube is like all of you understand and I can talk to all of you and it's nice. But one of the sad parts is like I get used to talking to the same people each day or conversing with all of you. And then a few people just disappear all of a sudden. It's like, oh, I hope they're okay. Or they ask about Bitcoin. All right, 9:54. We got the news in 6 minutes. Things are looking far more spicy than they were 10 minutes ago. The Russell has my attention. I'm curious to see what gold does, but I think it's got a few more bars to go before I'd be willing to do or take action on anything. The Nasdaq, I don't know. But I definitely, oil and these two down here have my attention for sure. Oil and the Russell. Yeah, and that's what the Discord community is fantastic. With everybody in there, trying to keep the random strategies to a minimum. Everybody in there is trading the same way, which is cool. Because it allows everyone to interact with one another and share ideas and gold just engulfed back up to the upside. 5 minute chart. That bar made a higher high. A little higher high, 1, 2, 3 back down, and a 5 minute bar that closed higher than the previous bar. This down closed bar closed lower, obviously, than all of these bars. And that also just created a very large peak formation high at the high of the day, kind of. And this is kind of a day zero, 3-day rectangle sort of setup. Peak formation low, peak formation high. Day 1 of the rectangle, day 2 of the rectangle. Really, the whole week is built a rectangle. The news may keep me from executing this trade, though, if it runs and takes out the previous day's low before I can execute, then we'll see. Again, realistically, trying to get in somewhere up here would have been ideal, not getting in at the low. But if there's some kind of decent pullback, maybe. We'll see. What is the big picture? Almost forgot. I don't know. We'll see. It's going to have to really convince me, though. Yeah, Tom, I said that this morning. I don't know if you were in here just yet, but having NFP tomorrow, I am in no rush. I am in no rush. If it's not perfect today, if I don't have a very, very clear understanding of why I'm entering the trade, and that pattern's not the most beautiful thing I've ever seen, I'm probably just going to wait till tomorrow. Sometimes there are some really good Thursday trades, especially like high of week, low of week, trend trades and reversals and things. But especially like those 3 pushes out of the opening range setups, a lot of times they will show up on Thursday as part of the Wednesday, Thursday, Friday template, and then Friday will be a trend trade or something like that. Okay, Nasdaq pinning down, and pinning up. 1 minute, 30 seconds on this bar left to go. And 2 minutes to the news. Russell's making its run very well. Opening range. We're still right in the middle of the opening range as well. This was the previous week's close. We've been really working into that, though. Interesting. Okay. All right. Now this is interesting because if you just look at price and how it's kind of behaved, sideways consolidation, spike the low, spike the high. Things seem to be evolving. There's the 10 o'clock news. Russell already making its run. They just triggered the previous day's low again. They've hit it, gone back into it. This is the previous, yep. Okay, so this is the lowest close of the current week. This is the highest. They can move against your thesis for a larger move tomorrow. Yeah, that's why I'm so adamant about, at the beginning of the week, it seems like every single FOMC non-farm week, I post on Discord or I talk about it on YouTube. Like, just survive till Friday, because a lot of FOMC non-farm weeks, the whole entire week will build the template for Friday. It'll turn into like a 5-day template instead of a 3, which can be confusing because if you're looking for something based off of what you believe to be a 3-day template and those moves just don't feel like they're behaving normally, a lot of times that's going to be because of that larger news event at the end of the week. It's all just building for that one event. I do need a drink, though. I'm going to go grab me a little sip, and I will be back in 30 seconds. And we've got 2 minutes left on this 5-minute bar, so I'm not going to miss anything. Okay. I think I was actually only gone for 30 seconds this time. Good stuff. Okay, Nasdaq. So this is what I'm talking about. They pinned down and then they pinned up. They built this range. Looking at the chart though, 1, 2, maybe 3. But I've seen these so many times where you get these slanting peak formations that you believe are going to engulf down. And then it just pins down and rips. So we'll see how this 5-minute bar closes. You timed me? 33 seconds? Oh gosh. Better step up my game. I'm going to start running to the kitchen. Alright, oil. Oil just triggered the low of the day. I'm watching gold now as well. I might be focusing on too many things. Two minutes and 30 seconds left on this 5-minute bar. Gold is definitely piquing my interest. If this bar closes like this, I will shift all of my focus toward gold. So I sold oil at 10:04. You see my little line down here, opening range high. It's gonna give us a decent little run here. I didn't put a lot of size on this trade at all. Just gonna see kind of where it goes, but I think I'm gonna shift over here to gold in a second and see kind of where that's going. That's a shame. I was really hoping that this bar would be like a death candle down through. Let's see, what time is it? We're, what, 2 minutes and 30 seconds into this 5-minute bar. Both the Nasdaq and gold are both at closing price. I'm not even paying attention to my oil trade. I'm just letting it do its thing. Okay. They just took out the... maybe not. New 5-minute bar should be about to open. Okay, I'm break even on oil. Now I can really focus on everything else. This should run down at least to opening range high. That's where my take profit is. All right, I'm out of that. Good. Good. All right, peak formation low, peak formation high, consolidation, downwards facing channel, trapping the longs. Each time it was getting taken away. $34 was the breakout. Really, like in a perfect world, this was supposed to be the entry here. First mouse, stop hunt to the high, peak formation high, engulfment. I got in a couple candles too late. A few bars too late. So a 30 pip run. Certainly not a huge trade. Did it with small size, but not bad. I won't complain. Yeah, I'm trying to monitor too many things, I think, at one time. It's freaking me out. I'm trying to watch gold and Nasdaq at the same time and monitor the time and all that stuff. Three minutes to the next 5-minute bar. Audio is low. Probably because I need to open my mouth and speak louder. Kind of mumbling to myself. My bad. Okay, 2 minutes to the next 5-minute bar. I don't remember. Uh-oh, hold on. Okay, breakout day 1. The breakout level is down there. We're shifting back towards the low of the day. Big picture, breakout week 2 down. 15-minute chart. Last 15-minute bar was an engulfment down. New 5-minute bar is about to open. Iceman, I agree. Okay, how did this 5-minute bar close? 7 seconds. If this 5-minute bar closes lower than the previous 2 5-minute bars, not bad. Unless it turns into a 3 push pattern and it goes right back up. Oh, Cameron, you silly fella. All right, well, I guess that's what we're doing. I entered the Nasdaq on a micro chart. Oh, what are you doing? All right. Well, I guess that's what's going to happen. We're just going to do that. Back down to low of day. I'm just going to behave as if this was full blown. Taking some off at the lows, which is normal for me. And then if it's going to follow through, I will allow it to continue. Yeah, I didn't notice the M. There was a little M. Yeah, let's see if we've got, where would my next target need to be? Breakout traders. Yep, those guys are still in profit. They need to get punched in the face. Not literally, of course. YouTube, please do not shadow ban my video. Let's go. If it continues to follow through, we continue getting 5-minute bar closing lower. I'm going to take it down to this breakout level here. Actually, is this the opening range high? It is, isn't it? Yeah. Let's throw that sucker over. And see if we get follow through down into that. And I'm going to manage this on a 5-minute chart to keep myself from watching every 1-minute candle freak me out. No, gold is doing as it should. That gold chart's is, I mean, that's beautiful at this point. I really like the Nasdaq trade I just took as well, but as far as gold is concerned, peak 1, peak 2, peak 3, back to the high of the day. Peak formation low, peak formation high. Attempts to break the high of the day in a 3 push pattern. 3 days of breakouts. Engulfment, 1, 2, 3 engulfment on the 5-minute chart. Sideways coil consolidation. I think any way you play that, whether it be a scalp or you're going to hold it for whatever, not bad. Very nice. Okay, so we've just pinned down through the low of the day. Let's see if it follows through or if this is going to turn into a low of day trade. We shall see. And I guess it really depends on how long you intend to hold on things, but you know, me, I don't know if you all have noticed, but I am very, very into the nail and bail sort of scenarios. I really like just taking a comfortable amount out, 30, 40, 50 pips, and just closing and being okay with that. On some days, you know, I look at the chart and I feel more confident in a trade that, you know, like US 30, I think last week, I took that was a 100 pip trade or so. I had a lot of confidence in what I was looking at to hold that all the way through. But I would say that my style is definitely far more nail and bail than holding on. And that's kind of what my data shows as well. That the longer that I hold on to trades, the less likely I am to be successful. Whenever I'm in a trade 5 to 10 minutes, those are usually going to be my best ones. And sometimes in a very high percentage of my trades, I'm only in for, I think it's between 1 and 4 minutes. Because those are the ones that are exploding in a direction aggressively and quickly and fast. And I just close because it's like, well, it hit my 50 pip or 40 or whatever, you know, target. Do I need to hold on for more? Sometimes it keeps going. Sometimes it goes right back. So I like taking those profits out and just, you know, kind of being done. Too many times that my profits become zero. Yep, those A tops and V bottoms, they'll come back and get you, or they pin up knock you out at break even, take out your really good entry, and then just keep on going. It's like, well, if I would have just closed on the explosion, I could have avoided all this. Yeah, exactly, Andrew. That's kind of been my mentality as well. I don't need to be greedy. There's always another tomorrow. Yep. Exactly. The template just continues to evolve. Day 1, 2, and 3. Whether that be Friday, Monday, Tuesday, Monday, Tuesday, Wednesday, Tuesday, Wednesday, Thursday, Wednesday, Thursday, Friday, Thursday, Friday, Monday. You know, they just keep on evolving. It's a beautiful thing. NQ with a pop-up. 3 push pattern engulfment to the downside. 1 minute chart. Not bad. It'll be bad if it pins down through this low and pops back up in the last 30 seconds. Let's see. NQ as it was breaking down out of this pattern. I took this as my 3 push pattern. 2 large pushes, but this little 1, 2, 3 engulfment down. And there's the pin hammer. Which really allowed me to minimize risk as well, because they really shouldn't go back above this high. And if it does, then I'm probably wrong. Also, the closing price being right there, I was taking it at closing price, which allows me to keep my risk very low. Uh-oh. Y'all are about to get Windex commercials. No thanks. Well, Mike, I can't tell if that's a positive or a negative sentiment coming from you. I hope you're doing good. Okay, if this continues to follow through, great. If we start getting back and forth down here, I'm just going to cut it. But as of right now, it's doing okay. One of the funny things that I remember from when I used to watch Stacey's videos is, and it always plays through my head too, which is I think is funny. Like I hear his voice yelling at me. Whenever they break down like this and they go back into that first consolidation, and specifically, I don't know if you've ever seen his charts, when they break down underneath like this and they pin, he always has a little line there. I just remember him shouting into the mic, anywhere in here. Anywhere in here is fine. And that kind of plays through my head. It's like that entry that I just talked about. You know, the 3 push pattern, 1, 2, 3 is great. But when I'm getting in here, I hear that in the back of my head. Like, we're at the level. Anywhere in here is fine before they break the low. Or even as they break down through the low. Anyways. That first pullback after the breakdown. And just looking kind of in this range. In between the peak formation that was made. In that first breakdown. Looking anywhere in here. Guy just screaming in the mic. Anywhere in here. Yeah. Good stuff, Ficos. Are we getting some back and forth? Oh, yeah, a little bit. I think I'm going to lock in a little bit more of this. Seems like the appropriate thing to do. Oh gosh, no. None of that. Oh, is gold going to come back with a vengeance? 7 seconds left on this bar. Uh-oh. This little heart thing is in the way. I can't see what you said. There we go. On oil? Nice. Very nice. Looks like there's been a few of you today that have been doing pretty well. I love to see that. Love to see it. All right, new 5-minute bar. Midpoint or midway through the hour. Yeah, you know what? In Q, it also looks like it ain't coming back. Well, I guess we'll see. Or if it does come back, I'd like to at least continue making lower lows and lower highs till we get down to this little breakout area. I'm trying to get it down to this super sophisticated line. Crazy sophistication, this line here. The straightest you've ever seen. Falling knife. Well, luckily I'm not going to catch it. I suppose I was the one throwing it. Not literally, of course, but certainly does look good as of right meow. Only 3 things that markets are going to do: breakout, pullback, trend, breakout, reverse, or stay in a trading range. We're broken out. They attempted to break out higher. This could just be part of a pullback in all, in reality. But usually, where do pullbacks tend to go or land? Well, the purpose of a pullback is to stop out traders that are in profit, convince traders that it's going to continue in a direction. So if we're going to come back down here and stop out these people that were profit from the long or at break even, where would they go back to? Where are their stops going to be? They could be at the previous day's high. They're trailing their stops higher. Maybe below some of these lows. The Russell is off the map. Cool. Mike, it's this is TradingView here. Is anyone else having problems seeing the screen? Is it like blurry or is everything okay? Is it pretty clear? All right, good. Okay, we're penning down. Pretty glad to have taken a bit off, even if I am trading on the wrong. Is what it is. Nasdaq, TR, but I took it on the took the micro contracts instead of the minis. So yeah, and I'd already taken profits down at, in the lows down here, and then I took a little bit more off, kind of in this area here in this consolidation. I was looking for follow through down back towards the breakout traders, you know, their stops and the money. So we'll see if that continues. Or 6 seconds left on this bar. If we get more 5-minute bars closing below their lows, that would be, I mean, obviously that would be ideal, but I'm pretty comfortable with where we're at right now. So still could, yeah. Maybe a little final blow off move. 1 minute charts in a, you know, another kind of a descending channel. We're getting this back and forth coming into the end of an hour. 10:40, 10:45. Might see it pull back before it follows through. Who knows? I saw, was it Joseph? Someone was asking for a latency test. And I did this a couple days ago, but where did he go? Is he still in here? All right, I don't even know how to do a latency test because, well, you know, me, I'm not exactly the most technology advanced human being in the world, but that's okay. Hey, Joseph, you're still here. All right, so, Joseph, since you're sitting here, in a few seconds, I'm going to say test. And then the moment you hear me say test, please put a period or something in there. All right, here we go. Test. Okay, so there's about a 3-second latency. Three or 4 seconds. That's not bad. Test. All right, let's try one more time. Test. Okay, so yeah, about 4 seconds. 4 seconds isn't bad. I think that's to be expected. All right, 3 minutes until we're 45 minutes into this hour. Would really like to see it follow through before the new hour begins, but what's cooking today? Took a short on oil, which was pretty short-lived. Took it back down to this line down here. Talk about first green day traps. I pulled my playbook up quite a few times on stream here, but oil's a down moving market. Look at this. Only 3 things that markets do: breakout, pullback, trend, breakout, reverse, stay in a trading range. So when we get this first green day, day 1 of breakouts in a down moving market and a huge consolidation and a squeeze pattern to the downside, we got space to get back down there. Good stuff. Same thing with the Nasdaq. Exact same thing with the Nasdaq. Week 2 breakouts, day 1 breakouts to the upside, first green day. Watching closing price for the trap. Peak formation, high of session. Pretty close to the high of the day. Come after the news, we had that little breakdown pattern in here. And then this one I'm trying to hold it until we get down to here. Can you talk to what oil is doing with the drifting? All right, TR, this is not Fast and the Furious. What are you talking about drifting? Oh, yeah, this exactly what I was just saying. Week 2 breakout. So, we're in breakout to the downside. It's a down moving market. So, one of the things that lots of people talk about, it's not just him, but Taylor, the 3-day cycle and things like that. In a down moving market, large rally days are oftentimes going to be a trap. Today's day 3 of the cycle. Day 1, day 2, day 3, they force a high in a down moving market. I'm watching closing price for the trap, and it starts to break down. Let's zoom in here. So we're under closing price, but we've been jamming up into it, which is fine. It breaks down. So peak formation low, peak formation high, consolidation in the middle. And remember, every time I say that same phrase, the next thing that I say that comes out of my mouth is, when that happens, I'm either looking for a short squeeze or a long squeeze pattern, or some kind of parabolic channel, which presented right here. Peak formation low, peak formation high. This is all just within the session. First hour puts in a low and a high. And then now we get the channel down in line with the larger thesis. And that engulfment came at, after the news, 10 o'clock was the initial down move. 10:01, excuse me. I got in a few bars late. This was ideal entry based off the 3 push pattern and the peak formation. This is the first mouse. This is the stop hunt to the high. That's the peak formation, the M. And the engulfment down, that's ideal entry. I took the breakout entry at 10:04. Looks like my Nasdaq trade's about to get closed. I didn't take anything for gold. I was watching gold, but I was already in a trade, I think, on oil for the initial drive. And then it started to pull back weird, and I didn't care for it. And then I started focusing on the Nasdaq and wound up taking that instead. All right, I just closed my Nasdaq trade. Only 3 things the markets do: breakout, pullback, trend, breakout, reverse, or stay in a trading range. First green day, breakout, day 1 trap. Straight out of my playbook. Pretty happy with that. Not happy that I took it with such small size because I accidentally traded a micro contract instead of a mini. But hey, you know what? It is what it is. That's what I get for not being observant. I could never tell you that, Art. I was tracking it because of breakout day 3. Peak formation low, or excuse me, peak formation high in Asia, peak formation low in London. Traded back up to the high of the day, the 3 push pattern, 1, 2, 3, the engulfment, which actually, after making this lower low, now it's pulled back in a 1, 2, 3 again. I couldn't tell you either way, but that's the reason I was watching this. I think it still has downside potential, but at the same time, you know, it's getting kind of late in the session. Appreciate that, Andrew, because I sold both. Yeehaw. Going back to grab the cash. Look at this. Let's project that line across. I'll sit here and watch and see if they come back down and smack these people. Remember, these are the guys that in my old streams I used to make dumb jokes about. You know, these are the breakout traders. And they're up here and they're calling all their friends and telling them about the Lamborghini they're looking at. And they've called their parents and told them this is going to be the trade. I'm going to be a millionaire just based off this one trade. They've gone full margin. They're scared. Or maybe their system just tells them to put their stops at break even. They've put their stop at break even. They're expecting higher prices the next day. And as Stacey would say, you know, nobody gets a free lunch. Now they're going to have to call their friends and tell them, I had to stop looking at Lamborghinis today. Maybe tomorrow. Or even worse, what happens when they start moving their stop? Because you can see these large breakout days like this. This might break out and fail. Today turns into day 1 3-day cycle, first red day. In a down moving market, if this breakout were to fail as well, you know, where are we going? We go back for the money at the other end of the range, maybe. Especially if the breakout of the opening range high fails. Peak formation low, peak formation at the high of the week now. In a down moving market, we could see some good trades tomorrow. Had some good trades today, though. I was a little hesitant about things when I was looking at it last night, but that's just proof, kind of comes to show how fast things can turn as the day develops and as the pattern develops. You know, all I've got in my arsenal is the levels, the large picture thesis, and behavior of price once you get to those levels. And I think today was a really good example of that, where I came into today with very low expectations. I honestly didn't think I was going to take anything. And within an instant, I say, oh, that's it right there. On that 5-minute bar, that's the one. But I think that's gonna do it for me, ladies and gentlemen. Before I go, though, before you all go, please tell me, did everybody enjoy starting at 9 a.m. today instead of the earlier 8 a.m.? I've been trying to search for the best time to start these streams. Wanted to get you all's opinion. Nine a.m. was good. Up to you. All right, we'll give. Actually, what's the news calendar looking like tomorrow? I don't know. I'll make a decision tonight, and it's either going to be 8 or 9 tomorrow. Either one. Oh, yeah, we got NFP tomorrow. Now we're going to do it 8. I'll see you all tomorrow morning, 8 o'clock a.m. Eastern Time. Ready to go, NFP. Big day of the week. Looking forward to it. Appreciate all being here. Been a good stream. Really enjoyed talking with you all. Yeehaw. I'll see y'all tomorrow. Bye-bye.